uprise of political tensions and the increasing impact of Thai military and local politics, as well as during the COVID crisis, where we see a big spike. So basically, a lot of investments or investment profits from foreigners have been wiped out during these two periods. And again, for fixed income, we see a similar pattern, even though there, the strategy seems to be particularly profitable if the formation period is based on a longer period of time. Okay, so these kind of like thought experiments, and we run a few others in the paper, kind of suggest that foreign investor trading seems to be in line with momentum. But then there's sort of like an alternative explanation which refers to portfolio rebalancing. And then basically three simple hypotheses which people tend to run in the literature, and we kind of repeat them. So the first one is that people argue that if there's an increase in foreigner demand for local assets, that should be associated with an appreciation of the local currency. So basically, on the left-hand side here in the first column, we have Thai US dollar, Thai baht US dollar returns. And then we look at equity markets as well as fixed income markets, and we basically run, in this table, contemporaneous regressions between demand for local assets and equity and returns on the foreign exchange market, and then we do the same for fixed income. And that hypothesis we cannot reject, right? So it seems to suggest that if there's an increase in demand for local equities, then there's also an increase in an appreciation of the Thai baht. The second hypothesis, however, which states that higher relative local returns, and by that I mean local, let's say, equity returns versus returns in the US, should be associated with selling pressure, and that we don't find at all. We don't find that in the equity market, and we also don't find that in the fixed income market. And again, that hypothesis is based on the argument that there should be a wealth effect, and because of that wealth effect, investors rebalance away from local markets. And the third hypothesis would state that higher relative local returns should be associated with the depreciation of the local currency. And again, we reject that. We don't find any significance for the equity markets, and we actually find significant coefficients with the opposite sign in the fixed income market. And again, that hypothesis is based on the fact that if you would assume that there is this sort of like rebalancing, meaning that foreign investors are selling local equity holdings, then they suddenly hold Thai baht, but since they are like foreign investors, they need to exchange that into US dollars. So they would sell their Thai baht, which lead to depreciation of the currency. But again, it's not what we find in the data. All right. So to kind of like wrap up, we run a lot of like different tests, but maybe remember three of these graphs. So we have this substantial differences in price impact contemporaneously between foreigners and local investors. That was what we had on the left. Then we see this heterogeneity in the investment profile across local investors. So there seem to be substantial differences between financial and non-financial institutions. We argue that foreign investors seem to be better informed, seem to be the more sophisticated traders, and they follow momentum-like trading approaches. While the idea of portfolio rebalancing, we would argue the evidence is relatively weak. And that is an important implication because basically our results suggest that momentum dynamics in emerging markets are largely affected by the composition of traders that are active in the market, meaning that the relative share of foreigners that are active in the market, the more likely is that momentum dynamics can be observed, which are not only affected the first moment, but might be related to an increase in volatility. And it also indicates that foreign investor participation has a strong impact on short-term price movements, and we should care about that because prices are then not only affected by economic fundamentals, but they might be driven by behavioral factors that impact the buy and sell decision of foreign investors. And I stop here. Thank you so much.
Okay, so yeah, let's just get into it. So I'll just provide the basic summary and the details concerning Ingomar's paper. The divine coincidence is that we had a conversation about it in the morning, which made it pretty insightful. So at the core, this paper examines the behavior and the trading behavior of foreigners on the return dynamics of Thai financial markets. Additionally, the paper seeks to establish what is the impact of foreigners' trading behavior and how it alters the behavior of local investors. So what is important is that there is heterogeneity insofar as two levels. The first is heterogeneity with respect to the market participants, which is foreigners, and then within heterogeneity with respect to the locals. And locals, you have sophisticated and non-sophisticated. So for sophisticated investors are those that are institutional investors, asset managers, and local banks. And then the non-sophisticated are corporates and retail banks. And retail investors, sorry. Additionally, concerning the asset classes, Ingomar and his colleagues put emphasis on Thai FX, equity, and fixed income. Okay. Yeah, so the data set is comprehensive to the extent to which that it's regulatory, and they're able to source it from the Thai Stock Exchange, and they're able to source it from Thai Bond Association and the Bank of Thailand. And as a natural consequence, it allows them to unravel an interesting set of facts. So the first one being that foreign investors engage in positive feedback trading. That is, if there's an increase in returns, foreign investors purchase more of these assets. And this is synonymous or consistent with momentum trading. In the VAR procedure, what you observe is that upon impact, if there's a positive shock to these returns, this is synonymous with an increase in the net order flow or a positive buying pressure. Secondly, innovations to foreign investor order flows are informative of future returns. And you are also able to unpack this with respect to the VAR. In fact, which is part of the additional perspective that I'll provide at the end concerning the equity market. What you observe is that there's a reinforcing effect with respect to these Thai equity market, and particularly with respect to the conduct of foreign investors, where indeed an increase in the buying pressure of these foreign investors is synonymous with a substantial increase in the positive return of equities. But similarly, an increase in the equities is synonymous with not only an upon impact increase in the order flows of foreigners, but then there's also an additional increase up until there's a peak and then a gradual adjustment. And this differs relative to other asset classes. With respect to other asset classes, what you typically observe is that there's an increase, but then there's a gradual adjustment after a day. With respect to equities, it takes over almost 2 weeks of trading activity. Okay, so yeah, third, sophisticated local investors mimic the behavior of foreign investors, right? And this feeds back to what the paper examines, right? What is the impact of the trading behavior of foreigners on local investors? But then with respect to that heterogeneity, so sophisticated investors mimic the behavior of these foreign investors because there is actually an informational content with respect to the conduct of these foreign investors. And then similarly, what you also observe is these non-sophisticated investors, which are the retail investors and corporates, they provide liquidity. Okay, fourth, they run quite a lot of tests. There's quite a battery of tests. But as he's discussed, further tests in the study suggest that the profitability of this momentum trading is positively related to the amount of foreign capital flowing into local financial markets. Okay, so yes, indeed, combining all these points, what is important and what you observe is that indeed the presence of foreign traders or foreign participants in Thai financial markets not only impacts the return dynamics of Thai financial markets and with respect to different asset classes, equities, bonds, and FX. Additionally, it also impacts the conduct of local or domestic investors, and particularly sophisticated investors. And yet again, foreign investors bring new information to local markets. And this is an outcome of the fact that the information set or the manner in which they conduct it's independent of local macroeconomic fundamentals. Okay. Yeah, so what I want to do next is progress into the contributions of the paper. And yeah, this is also part of a discussion that we had in the morning. Ingomar discusses 3 contributions, and yeah, he's free to agree or disagree whether or not there's an additional one, a 4th one. So the first one is to contribute to the strand of the literature that puts emphasis on the heterogeneity of investing behavior, and typically in the context of local and foreign investors. The additional layer of this paper is that it also puts emphasis on within heterogeneity, i.e. looking at sophisticated and non-sophisticated investors. Okay. Yeah, so the second contribution is with respect to the discussion of the informational content of foreign and local investors. And indeed, what is crucial is that foreign investors do bring new information to this market. Okay, and then the third contribution concerns these Thai financial markets. And what is comprehensively discussed in the paper is that there are several papers that concern Thai financial markets and that examine the impact of heterogeneous agents and their trading behavior. However, emphasis is usually with respect to one market, which is equities. So in this context, in as much as he's examining Thai financial markets, but there's also that heterogeneity within those agents, moreover, between different asset classes, which is that equities, bonds, and FX. Okay, so yeah, the 4th contribution, and this is implicit in the paper. And yeah, upon impact, the question might be, why don't you examine China if you're also examining an Asian financial market, among others? And there is validity to that question. Why is there validity? Well, among other things, there is rapid and exponential growth in Chinese financial markets and across different asset classes. So firstly, concerning FX markets, there is rapid and exponential growth in the onshore and offshore trading of the renminbi. But to reinforce this, what you also observe is that there is rapid development of the fixed income markets concerning the Chinese markets, particularly the panda bonds. And these are Chinese or renminbi-denominated bonds that are issued on mainland China. And then you have dim sum bonds, and these are renminbi-denominated bonds. And these are issued offshore, typically in Hong Kong. And as a natural consequence, that should be a fertile ground for examining not only a non-G7 economy, but an Asian giant, right? But relative to China, the data set that they have is not only comprehensive, but it's holistic to the extent to which that it also does not have any biases because of the strict reporting requirements, and therefore they have access to this data. And that differentiates this paper relative to any other existing papers. And as a natural consequence, in as much as, yes, you may argue, why not examine China? It's virtually impossible to have access to this holistic data set for China. So that's an implicit 4th contribution. And this is well documented in Robert Macaulay and Chang Shu. They are at the BIS as well. And then in a recent report in this BIS triennial central bank survey and OTC derivative survey as well. Okay. Yeah, well, I've covered this. So, yeah, in as much as, yes, China is modernizing its financial markets, both within the context of FX and fixed income, but having access to such comprehensive data, in fact, for any emerging market for that matter, it's virtually impossible. So I just want to provide just one last additional perspective, and this goes back to the discussion with the equity market and with respect to the instrumental VAR framework that he has. So indeed, what you observe, right, relative to FX, relative to fixed income or to the bond market, what you observe is that an increase in the buying pressure associated with equities is synonymous with an increase in the returns, right? And what you observe is that that increase in returns is persistent and substantially large. It's almost 200 basis points relative to that of FX or in the bond markets. With bond markets, it's, I think, 75 basis points, and then with FX, it's like 25 basis point upon impact increase. And then additionally, what reinforces this is that, yes, you examine the impact of an increase in the buying order, but if you have an increase in the returns or an innovation in the returns, this is synonymous with an increase in the buying pressure, and particularly of these equities and with respect to foreigners. And not only do you have an upon impact increase, you also have an increase which reaches a peak and then a gradual adjustment. And this proceeds on for 8 to 9 days, almost 2 days. Concerning FX and fixed income, this usually takes 1 to 2 days up until there's a reversion towards the initial value or to the mean value. And that is something that is also unique, that reinforcing element, especially with respect to foreigners and the equity market in this context. Okay, yeah, so yeah, I've discussed that in this context, yeah. So you see it in the context of equities, it's almost 200 basis points. However, yeah, with respect to fixed income and FX, it's 27 basis points and 75 basis points, respectively. Nonetheless, yeah, similarly, increases in Thai equity returns are generating persisting buying pressure from foreign investors, and this is in a manner consistent with momentum strategy buying. So, yeah, in a nutshell, they conduct a comprehensive analysis, and there's several battery of tests. But at the core, what the paper seeks to establish is what is the impact of foreign investors' trading behavior on the return dynamics of Thai financial markets, and with respect to different asset classes, and then additionally, how this impacts that within heterogeneity within local investors, both sophisticated and non-sophisticated as well. Yeah, that's it.
I'm not sorry. Do you want to have a quick follow-up, or if there are questions, please show your hands so I can get a sense.
Should I quickly respond first? Sure. Well, thanks so much over there. Thanks so much to Discussant for these kind words. I think, I wish you were my referee more often than not just my Discussant. Maybe let me just pick up on 2 points. You're absolutely right about obviously the the importance of alternative and larger emerging markets in the area, and obviously the project was kind of initiated and is driven by the availability of data, and obviously that is not available necessarily for other countries, or hard to obtain in particular for China. So in that sense, it's unfortunate. However, having said that, there's anecdotal evidence of trades that where investors basically would like to invest in other emerging economies, such as China, but they can't because they don't have an access to that. So they're trying to invest in neighboring economies, or economies which allow them to do some sort of like proxy trades, so to speak. So in that sense, it might be still interesting to look at these smaller countries. And then the other point is I should probably point out that it's probably not paying off following foreigners. And I should emphasize this, that these are kind of like, thought experiments that we kind of like run to show that it's similar to time series momentum. And, since this is at the daily level and it's not publicly available and, coming with the it's, very likely that this information has been incorporated by the point in time that, any other market participant can actually trade on that. And we show in the paper in an appendix table that, calculating actually, average returns and profitability, that it's in fact only, foreign investors who profitably make money. So yeah. In case there are any questions.
Yeah. Nice paper. I wanted to ask, for the foreign investors, do you have a breakdown of what sectors they're in? And also, so you find foreign investors are more informed, but at the same time, they're more momentum traders. So how do you link the fact that they're momentum traders to having more information? And is the information coming more from global news stocks?
Thanks. Yeah, great question. So to the first one, unfortunately, we don't have information on where they are based, so we don't have a breakdown. Anecdotally, we know that they're most likely in the US, but again, we don't really know that for sure. The second point on global news shocks is actually something, we're looking into it, because ideally, I guess, we would like to see that foreign investors are more responsive to global shocks, while local investors might be more responsive to local news shocks, which we already have. So yeah, we're still looking into it, but it obviously makes it more difficult since we don't exactly know what the origin of the foreign investors are. Thank you.
Any more questions? If not, let's wrap up here and have a coffee.
Well, just to clarify, the next section you see in the program of sort of this research. The idea there was to use you as a captive audience. Now we brought you here, therefore we try to use you. Was the idea for the bank to present some of the research they are doing, so that to have sort of feedback, and it was supposed to about 2 or 3 people to come and present. External shock, only Pierre is here with us today. Therefore, he will present some of the work that they are doing on systemic risks, banking risk, and the network effect of interbank risk. At the same time, here we have a lot of PhD students. Please raise your hand. The PhD students. Yeah, you. Yeah, a lot of PhD students. I would really love if you could, mingle with them, and you come forward and use this captive audience to get good feedback on some of the ideas that you are working on during this coffee break, and if you want later. Therefore, we'll meet again here at 4:30 for Pierre's work, but with all the other PhD students in these days, we would love if you could